Parag Thakkar, Senior Fund Manager at Ford Capital, now joining in. Parag, interesting updates coming out of the Indian technology space. Everyone had written it off. There was no interest in technology names. But then you had TCS, announcing a play on the AI data center, making a $1 billion investment to begin with. Now HCL Tech quantifying the kind of AI revenue, $100 million as a quarterly run rate as it stands today. I mean, is it time to start looking at technology, and are these steps material by the Indian tech companies?
Yeah, I would definitely like to think so. See, first of all, my view is that these companies are free cash flow generating machines, right? So you cannot completely ignore this space. And that is why we were also underweight, but not to the extent the street is. We have around 9% weight, and we have TCS and HCL Tech both in our portfolios. And I would like to say that, see, HCL Tech delivered on all fronts, right? Be it revenue growth 2.5%, be it margin 17.5%, be it deal wins $2.5 billion, and plus the commentary that this kind of deal win run rate will continue, which is very, very important, right? So I would say that, and the only thing people have against HCL Tech is now the valuation gap between HCL Tech, TCS, and Infosys is very narrowed, while HCL Tech earlier used to get a discount, significant discount. But HCL Tech is delivering, right? So I would say that, yeah, you cannot completely ignore this space for sure, because of simply the fact that TCS, Infosys, and HCL Tech right now gives you 4.5% dividend yield. Plus it is not that this AI-led productivity gains are leading to some deflationary in revenues as of now, at least. That is a fear, the only fear which I have in future. But I would see the commentary of each IT companies to build a view around that. That is a key monitorable for me. And for HCL Tech, the key monitorable will be next year, whether they can be able to deliver margins between 18 to 19%. But given the current margin of 17.5%, which has recovered from Q1, as they had said in Q1, I think it is manageable. Unless this AI-led deflationary impact on revenues plays out next year.
Okay, all right. Hi, Parag. Good morning and good to see you in. Parag, I wanted to ask you about the exchanges. BSE, late last, towards the end of trade, my colleague Yash, he had reported with regard to this weekly options, restriction. That fear is gradually receding. And that's why you saw BSE did pop up in trade. I was speaking to Amir Jaswani as well as Stallion yesterday, and he was telling me that in case that doesn't come about, then capital market plays could be forming a near-term bottom. How would you approach this space, whether you're looking at the exchanges, whether you're looking at the brokerages or the likes, and also if you're looking at MCX, because out there as well, the premiums actually have been spiking up. Quarter one, I think it was average of 4,500 crores, second quarter 6,500 crores, and on Friday it was more than 8,000 crores.
My way of looking at it is that capital market plays and all these exchanges and all, most of them have gone up too much. Of course, capital markets plays have corrected, and if you are, as you're rightly saying, that this expiry related thing, if it plays out, that might be a bottom of these companies. These companies are good quality companies, no doubt. All the exchanges and all the capital market plays. But right now, my view is that I'm very bullish on economy, and I would like to play economy through financials. And that is why I'm very bullish on companies like Tata Capital, which has got a very muted listing yesterday. But I would like to say that, when the CEO of Tata Capital, Mr. Rajiv Sabharwal, has said that if the economy growth continues at current rate and what is anticipated after the GST cut and income tax rate slab increase and of course, interest rate cuts, then they'll double the loan book of 2,30,000 crore in 3 years. And with ROA improvement coming from credit cost itself coming down from 1.4% to below 1%. So that's a 40 bips ROA kicker itself. So I think the EPS CAGR can be 34% in this case. So I would like to play it more through financials who are lenders rather than capital market plays, which can be volatile because of various global news.
Parag, do you have a view specifically, good morning, on BSE? We reported yesterday, I don't know if you saw, you say, because you have the view on capital markets we got, but the exchange specifically, I don't know if you have a view, because SEBI's thinking on restricting weekly options seems to have been restricted. Stock reacted to our story, was up 4-5% at one point. It's off, I think it's from the lows, it's come up about 20%. But if this was the big overhang, if this goes away, I mean, could be meaningful. But you got to like the business, underlying business in the first place. Your thoughts, Parag?
No. So my point is that, yeah, these are great businesses, right? Infinite ROC businesses. So definitely I'll also have a look. But right now, as of now, I'm not having this stock in the portfolio. So I would refrain from commenting on it.
Okay, just a quick word on, if you will, and we'll put out the numbers, etc. as well. LG Electronics, right? Listing is today. And large IPO, larger listing, I guess, and perhaps enters the 1 lakh crore club, market cap club, right at the first tick. What's your sense, and what should investors do? Those are the lucky ones who got the IPO and allocation. What should they do, Parag?
Yeah, they should hold on. Definitely that they should hold on. Because I saw the numbers, it is even at 1 lakh crore, it will be just 40 times FY27 earnings. And with a ROIC of above 60%.
Okay.
And clear dominating market share in washing machines and inverter AC and various other things. So I would say it's a good white goods play, strong brand, MNC, fantastic parentage, and very high ROIC business. So I would like to say that this is a good, and you have to have one of those in your portfolios, right? And unfortunately, the listed ones are not doing that well, already listed ones. So I would say that this can be a must-have in the portfolio stock.
All right.
India's consumption story, especially after the GST cuts and whatever has happened after the government has shifted focus to consumption-led, demand-driven growth for the economy.
You heard the Tata Motors, the demerger, and of course how it breaks up in terms of value. Your thoughts?
So my view is that, see, ultimately all Tata Group companies are great companies. Under Mr. Chandra, they have all done a fantastic capital allocation and value unlocking whenever required. So I would say that from long-term perspective, yes, but from short-term perspective, JLR's performance needs to be monitored before buying Tata Motors stock. So we don't have it in the portfolio, but of course it is in our radar. And whenever we see some uptick in JLR, we would jump to buy the stock. That is my clear view. Because then that might be at a higher price, because you always have to pay price for certainty in the market. But JLR is a very important piece which we cannot ignore in Tata Motors.
Parag, what's your view? RBL Bank, valuations still seem to be a little bit in favor. The stock has seen a massive run in this year. My director will just pull up, maybe a 3-month, 1-year chart of RBL Bank and the Nifty Bank. Your view on it?
So we hold it in our portfolios, very small weight, 2% weight. So I would say that, see, the appetite of foreign investors for financials of India is fantastic. And that is why we bought it actually. After seeing that, Sumitomo of Japan bought stake in Yes Bank, a 24% stake. Then IHC bought stake in Samman Capital. So all these small financial entities, they get a very good value, and they get I would say that they are up for grabs. Plus, the latest business update of RBL also indicated that they will see a lesser margin compression or even a 5 pips margin expansion QOQ. That also attracted us towards the stock. So I would say that fundamentally, as you rightly said, at one-time book value, there's nothing to do much. Apart from the fact that stock has rallied very well, so it might see some profit sometime. But I would say that Indian financials are completely in favor in terms of attraction from foreign investors, and that should be the case, because it's a highest growth country, and definitely we see very good future for next 18 months after all the steps which government and RBI has taken in last 6 months.
By the way, Parag, do you own any of these silver ETFs? Or are you allowed to, or any thoughts?
No.
If you take 5-6%, it's like a...
Yeah, but I would like to say that this is actually parabolic move, which I would hate to participate in. I could have participated earlier, but as of now, I am not seeing any great... I'm happy to miss kind of situation for gold and silver right now. These prices I cannot buy.
No, absolutely. Understood. Parag, thank you very much. Good speaking with you here on CNBC-TV18. Appreciate your time.